Hi everyone, let's start our ACCA F2 or FIA FMA paper, which is management accounting. Now if you could please go to our website, and I assume you are already in the website. So if you go to the F2 section, you can download our lecture notes. Please keep them in front of you as you watch these lectures, because in each and every lecture I'm going to ask you to open up the notes and say, for example, page number 75 of the notes or page number 60 of the notes, so that you should have them ready in front of you, and calculator as well, and obviously these notes, and so that we can go through the notes together as you watch me do the questions on the board, and I will read through this iPad. I will open up the notes in the iPad, the same notes which you will be watching on the screen, on your screen, and I will share the screen as well, so you will be watching them on the screen, but you should have them in your computer or in the hard form as well. It's better to have them in the computer, because obviously if you're printing them, you're harming the environment. Alright, so let's move and start studying our ACCA F2. Right then, so if you come to page number 1 of your notes, it's chapter number 1, Introduction to Management Accounting. Now, as I said to you in the previous lecture as well, that management accounting is a very broad term. There are few branches to management accounting, one of which is cost accounting. Now, most of the syllabus of F2 and FMA is of cost accounting. I don't know why they made the name of why they have given the name of management accounting, because most of the stuff is related to cost accounting, although there are a few topics which are related to management accounting, and recently they have increased knowledge of management accounting into this paper, because otherwise if you remove the decision making or relevant costing of it, and then obviously it will be just a cost accounting, but you don't know about them topics yet, so we will gradually go through them. However, if someone asks you that what is cost accounting, and then you can say that we have studied cost accounting in ACCA, and that is a paper of cost accounting. So basically cost accounting is just one portion of big management accounting. Right then, so as you can see on your screen, let me share the screen with you. Here you go. As you can see on your screen, chapter number 1, Introduction to Management Accounting. Now, first of all, it says about data and information. Now, what is the difference between data and information? Now, when I see this word, when I open up F2 notes, I just kind of think that if I'm studying information technology, or what? If I am studying accounting, or is something like data information, it sounds like you are studying a technology paper, like computer paper. I don't know if you feel like that, but I feel like this. Anyway, we are studying in data and information just for the sake of understanding accounting. You will somehow, at some point, you will think that this is relevant to accounting. So let's differentiate between data and information. Now, what is data? Data is just a raw information. It is a raw material that you have to process. Say, for example, if you've done a transaction, say, for example, if I give you a few receipts, that this is the receipt of fuel, this is the receipt of shopping, this is the receipt of I don't know, I've paid to my laundry or something like that. So if I give you a few receipts which I have done some expenses on, then these receipts are just a raw data, isn't it? You haven't processed it, and if I ask you to give me a total of that in a report form, then you will have to open up your a spreadsheet, and then you'll write, this is laundry, this is blah, and you will present it in the form of a report to me. Now, why do I want to do this? Because I've just given you an example of 3 receipts, but in big companies or in big businesses, there'll be thousands of receipts which I, as a manager, can't see all of them. So I will ask my assistant to process them into a form of a report, then show me, then I will see the report, because it will consume less of my time, more of his time. So when I see that, I will see information which has already been processed. Right, so that is the difference between data and information. Data is basically a raw material, and information which you have presented me in the form of a report that has already been processed, that has already been worked on. So I am seeing a report which is which is in a good form and which consumes less time of a manager. All right, so information. What is information? Information in the note, it says, is the data that has been processed in such a way as to be meaningful to the person who it receives. Most obviously, you are preparing it for your manager. Now, information is anything that is communicated, and you are communicating that information to your manager, most likely. Right, so what are qualities of good information? Now, when you're presenting your information, you have that information have to have some qualities into it. Now, if that information is just a quality less, it does not have any qualities into it, then obviously that information is useless. So what sort of qualities are we looking for in the information? Now, this is a list of few qualities which we look for in the information. Now, you might well see in the question in the exam that what are the qualities of information. So you'll have to list all of them. Now, there is a small mnemonic to it which is accurate. So ACCURATE. Now, with every single alphabet of it, we have made something. So first of all, what is from A? A means accurate. Then the second C, which is first C of the accurate, C means complete. Then another C means cost effective, and if likewise at the end, if it is E for easy to use. So basically this list is easy to remember if you look at the mnemonic accurate. So A, what is A means? A means accurate. C means complete. Another C means cost effective. So this is accurate, right? So information must be accurate. So this list is easy to remember if you remember it by this mnemonic, which is accurate. So information must be accurate. So what does it mean, accurate? Accurate means it must be true, it must be right? It must be in the correct form. So obviously if it is not, then it is not meaningful. The second one is complete. Information must be complete. Obviously, if it is incomplete and manager is calling you again to ask some more information, then obviously it is not useful. The second C of accurate means cost effective. So information must be cost effective. Now, if you are presenting me an information, I should see that how much I am incurring to process that information. So I have to do the cost benefit analysis. Now, what does the cost benefit analysis means? That benefit must be more than the cost which I have incurred on this information. So if the information which you have presented me is of the value of, say for example, £10, the cost incurred must be less than that, right? So cost effective benefits of information should be outweigh its cost. Then U means understandable. So information must be easy to understand. So you must not use the language which the manager does not know anything about. So it is easy to understand without unnecessary technical language and jargon. So you must avoid technical language. So if you say, for example, if you have presented a report regarding audit and you are sending that to a non-audit person, to a person who does not know anything about audit, you must not use technical audit knowledge. You must not use technical audit terms which that person does not know anything about. Obviously, you should communicate in a way that is easy to understand for them. All right. So R means relevant. Information must be relevant. So the information which you're giving to your manager, it must be relevant to him. You should not say, all right, what have I done during my day? I fought with my wife. Then on my way to this office, I've done an accident. So this information is useless to your manager. You must stick to your job. The information must be relevant to him. It does not waste his time. You must go to the point instantly, without wasting any time of your manager. So information must be relevant. Must be relevant to the person using it. So knowing purpose of information is vital. Then it says accessible. It should be easy to access without any restrictions. Now, when we say restrictions are very good as well at times. Now, if you have, let's say for example, protected an information with a password, that is good, because otherwise someone unauthorized person may use it. However, if you're sending it through email, through a secure email to your manager, and you know that only your manager will read it, then there is no purpose, there is no, it is just meaningless to secure it with a password when you know your manager going to receive it. And worst thing which you can do is secure it with a password and send to your manager without telling him the password over the phone. So when your manager opens the file, he can't open it because he does not have password. So he'll have to ring you. It wastes the time, all right? So basically, accessible means it should be easy to access without any unnecessary restrictions. Restrictions are good at times, as I said, but they're not good always. So they should be the unnecessary restrictions, should not be there. Right. So then after that, it says T for timely. Information must be available in time. Now, say for example, if your manager has to make decision today on the base, your manager has to make the decision today based on the information which you have to give today, and that information you're giving tomorrow. So obviously it's meaningless because the information was not provided on time, so you won't be able to make the decision. So information must be timely, otherwise it's useless. Then after that it says easy to use. So information must be easy to use. Now when we say easy to use, it again means that it should not have any technical things in it, so it must be easy to use for your manager. Right? Now we know the difference between data and information, and we know why we need the information and what qualities the information should have. All right? So now let's move to process of decision making, which is our next topic, and it's very easy from an exam point of view as well. Now, what is decision making basically? Now, decision making basically means if you have two options you have to choose from, then whichever option you choose, that ability to choose from the given options is called decision making. All right. Now, if I was coming to this office, I had two options: walk to the studio or drive to the studio. So I had two options. I had to make up my mind. That was decision making. I have decided to come by car. So that was my decision because I made a decision to come by car. I could have walked, so that was decision making which I made while sitting at home. All right. Now, process of decision making, when it comes to a company, when it comes to a corporate level, that was my personal decision making, which I've given you the example. But when we come to the corporate level, we have to make decisions at corporate level, and that decision making has a process. Now, what is that process? Process of decision making. Now, it consists on planning, decision making, and control. Now, there are three processes. One is planning, then decision making, and the last one is control. Now, to be frank with you, planning, decision making, and control, if we add costing into it, if we add costing into these three, that is our whole syllabus literally. Now, basically our syllabus is costing, planning, decision making, and control. That is our F2 syllabus. Right? So let's move to our process of decision making. Now, what is process of decision making? Planning, decision making, and control. Now, what is planning? Now, planning can be done in different ways. So there will be tactical planning, strategic planning, and operational planning as well. We will see in a minute. When we finish this, process of decision making, the planning could be of three different ways. Now, what is it? It involves establishing the objectives of an organization and formulating relevant strategies. So first you have to define an objective of your organization. Say for example, if your organization's objective is to maximize the profit, which mostly will be, if your organization's objective is to maximize the profit, now you have to make up a plan how you're going to achieve it. That is planning. Now, how you're going to achieve the organization's objective, that is our plan. Right? Now, formulating relevant strategies that can be used to achieve those objectives. Now, planning can either be short-term, which is tactical planning, or it could be long-term, which is strategic planning. Right? Now, after that it says decision making. The process of decision making involves three different phases. One is planning, decision making is the second one, and the last one is control. Now, what is decision making? As I said to you earlier, involves making a choice between two or more alternatives. So if I have given three options or two options, I have to choose them. I have to choose from them, and that is decision making. And the last one is control. Now, when you have known the results and you can control them. That is ability to control, and that is excuse me, that is called control. Now, information relating to the actual results of an organization is reported to managers, who then use the information relating to the actual results to take control measures and to reassess, amend their original budgets and or plans. Now, say for example, if you have provided an information to your manager, then he will be able to make the decision. If the company is going worse, it can save it from worse, from even worse position. So he will be able to make the decision on your information, on based on your information. So he will be able to control that leakage, you can say, or the loss. So that is a control. So that was process of decision making. There are three phases, as I said. One is planning, then is control. Planning, decision making, and the last one is the control. Right, now we have known the planning, as I said to you earlier. There are three different levels of planning. Now the top one, if we see here, if you look at the board here, there is the top one, that is strategic level. Then this one, middle one, is a tactical level of planning, and the last one here, the bottom one, is operational level of planning. So basically there are three levels of planning. Now when I say three levels of planning, it's three levels of management. Three levels of management in the company at corporate level. So there will be three levels of management who are making the planning. Right? Now if we talk about the strategic, which is the top one, strategic level planning. Now what could be the planning of strategic management? Now basically strategic planning is a long-term one. Let's say for example, if I have an operation here in UK of my businesses, and if I want to expand it to Spain, now that is strategic planning, because it is a long-term decision to make, because I will have to see local trends there, taste of the customer, I will have to see the economic conditions, the government factors as well. So there will be different things which I have to think about. So before expanding to Spain from the UK, I will have to think about lots of things, and that planning which we will make, that is strategic planning, the top level planning, that is called strategic planning. Now the tactical planning is a middle level planning. Tactical planning involves middle level management, which will be making decisions, which will be planning for the company, not on the long-term basis, but on the short-term basis. Basically short-term to long-term, you can say, but they do not involve very long-term. Say for example, does not involve 5 years planning, because at strategic level it involved more than 5 years of planning, whereas at tactical level it involves from months to years. And if we talk about the bottom one, which is the operational level management, it involves day-to-day planning. The bottom level management, which are involved in the factories, their management, they have to make the planning on day-to-day basis. How to do this job, how to do that job, how to catch that customer there, how to sell them extra stuff to that customer. So that is daily level planning that you have to do every day. Right, so levels of planning in your notes: strategic, which is long-term corporate level planning; tactical, which is short to medium term, made by seniors and middle management; and operational planning involves making day-to-day decisions about what to do next and how to deal with the problems as they arise. Right. Now after that, financial accounting systems and management accounting systems, they're two different systems. Now ensure in the financial accounting systems, ensure that assets and liabilities of the business are properly accounted for, and provide information about the profits and so on for the shareholders and the interested parties. Basically this is just a definition, basically involved differentiating between financial and management accounting, which is available on next page, which is page number 2. Now difference between financial accounting and management accounting. Now there are two different types of accounting. Now basically accounting is a subject, and there are two different types of accounting. Which ones? No, not cost and management accounting, but management accounting and financial accounting. Right? And one is management accounting, another one is financial accounting. Right? Now hang on. We have seen cost accounting as well. Now where will cost accounting fall? Now, cost accounting will fall underneath management accounting. Now, that is management accounting, and its kid name is cost accounting. Now, has financial accounting got any kid? No, basically he hasn't got any kid. So financial accounting is on its own, management accounting and their kid a cost accounting. Their baby name is cost accounting. So one portion of management accounting is cost accounting. Now, two major types are management accounting and cost accounting. Now we have to differentiate between these two. What we have to do in management accounting, what we have to do in financial accounting. Now if you have a pen and paper in hand, please write down the difference between those two. Now if we talk about the management accounting, now management accounting really has to do for the management. Now you have to make, if I am working, say for example, in Accounting Institute in management role, although in just teaching, and if I'm making up the accounts of the management, if I'm making up the accounts of Accounting Institute, now while making the accounts, I have to make for my own records, right? So I'm making the accounts and I will have to provide them to management. So that is only for my own management level use. It is not for any other person's use. So it is just for our use, for our internal use, right? So that is management accounting. Now management accounting is just for internal use, whereas if we talk about the financial accounting, that is not for internal use, whereas it is for external use. Which one? Financial accounting. Now, management accounting is for internal use, to improve our systems, to improve our organization. That is for internal use. We make the accounts, so we look for pitfalls, then we try to improve that, right? So that is management accounting. Whereas financial accounting, we make it for external purposes. Now, what external purposes? While we make the financial accounts, we make the financial reports so that shareholders can see it. Now, we are the management, but we are making it for the shareholders which are not in the management. So they are for external purposes, right? So we are making two types of accounts in Accounting Institute. I'm just assuming. So we are making two types of accounts. One is management account, which is for our internal use, whereas the other one is financial accounts, which is for the shareholder purposes, so that shareholder can see how are we doing in the business, right? So there are two types of accounts. One is for internal use, which is management accounting. Another one is for external use, which is financial accounting. Now just think about it. If it is for our internal use, we can make it as we want. There's no restriction because we are just using it for our own self. Now say for example, if you are doing the practice of the question, all right, if you're doing a practice of the question at home, you will just write down whatever you like, right? Whereas if you want to do it to present to me, or you want to do it to present to an examiner, you will do it in a very good way, in a sophisticated way, so that you can impress him, isn't it? Now same thing applies here. If we are making management accounts for our own internal purposes, we will make it in whatever way we want. However, if we are making the accounts for external use, for shareholder use, we will make it in a good format, right? So that they can like it, all right? So that is another difference. The format, we can make whatever way we want. For however, for financial accounts, we have to present it in a specific format to the shareholders or to other external parties. All right. Now, as far as timing is concerned, when we have to make the accounts, the financial accounts are made annually so that shareholders can see annually how are we doing. Whereas management accounting, they are normally made monthly or quarterly or semi-yearly, you can say. So half yearly. It depends on us. Whenever we want to make, we can make monthly or yearly or whatever. All right. So if we are talking about the time, we can make whenever we want. In management accounting, for financial accounting, we have to make it annually. All right. Do we have to follow any standards in management accounting? Have we heard about any standards? Now you might not have heard about any standards, but if you have passed F3, you might have some. Now, F3 is financial accounting. Now in financial accounting, because we are presenting it to external parties, we have to follow some standards. We have to follow some rules while making the accounts. All right. Whereas in management accounting, because we are making it for our own purposes anyway, So we can make in whatever format we want, we can make whenever we want, we can make in whichever way we want. So there is no standard, all right? So we can make in whichever way we want, all right? So these are a couple of differences which I've told you. We will see some more in the notes as we will read the notes now. Right though, so financial accounts and management accounts. Now, financial accounts are made to record the financial performance in a period and financial position at the end of that period. And whereas management accounts are made to aid planning, control, and decision making. Now, management accounts are not required by law. Now, I haven't told you that. One thing is required by law, one thing is not required by law. Now, because we are making it for our own internal purposes, so obviously it is not required by law. We can make, we cannot make, it's up to us. However, external accounts, which are financial accounts, we have to make it. It is required by law. And financial accounts concentrate on the business. Limited liability companies must, by law, prepare financial accounts. All right. So, financial accounts. The next one is financial accounts concentrate on the business as a whole and are an end in themselves, because we have made the financial reports. That is an end product. Whereas management account, it is not an end product. We have made them accounts, but we have to make the decision based on them accounts so that we can improve the performance of our company. Excuse me. Right? So management accounts are not end product. However, we have to make decision based on them. So next is the format of published accounts. Published financial accounts is determined by the local law, which is IFRS. Financial reporting standards and international accounting standards. However, in management accounts, no specific format, it is entirely at management's discretion. Right? And the next one is financial accounts present an essentially historic picture of the past operations. Now, financial performance, financial accounts look at the past, right? Whereas management accounts look at the past but also think about the future. Right? So that is another major difference. Management accounting look at the past but also looks at the future, like making the budgets. Right? Whereas the financial accounts, they just look at the past and then they make the accounts and present it to the shareholders. They do not look for the future. However, in management accounts, you have to make the decision based on them, based on the management accounts. Right, and after that it says it is for external use, whereas management accounts are for internal use, as I said to you earlier. Hang on, I forgot one as well. Earlier than that, it was most financial accounting information is of the monetary nature in financial accounts, whereas in management accounts it is monetary and non-monetary. Now, monetary means thinking about the figures. So there will be just the figures and numbers in financial accounting, whereas in management accounting there will be some numbers, there will be some accounting, but there will be some commentary as well. There will be some advice to the management. Do that. How to increase the sales? You must increase the sales. You must reduce the labor because labor idle time is very high. Likewise, all right. So after that, it tells us the cost accounting. Cost accounting is part of management accounting, which examines cost of different products and services which organization is selling, and this information is then passed on to management accounting. And after that, it says what is objective of organization and strategy. What is strategy? And in the end, it says there are different objectives of organization which should be defined clearly. Now, objectives always should be defined clearly. Now, say for example here at Accountancy Tube, the management should tell us what is the objective of our organization. What is the objective of Accountancy Tube? To provide free lectures, to provide free education, to provide free quality education. Right? And so that goal congruence can be achieved. Now, when the objectives are clearly defined, now say for example if we are sitting 5 tutors together, that is meeting of our committee, you can say. If we 5 tutors are sitting together, management tells us that is objective, to provide free quality education to the students around the globe. That is our objective. Now when we know this is our objective, we can together, as a management, we can together work towards that goal, towards achieving that goal. That is called goal congruence. Now, goal congruence simply means that achieving same goals of the organization together as a management. If all management is working towards the same goal, that means goal congruence is achieving. Right? So that is end of our chapter, literally. Next chapter is on sources of data. So please make sure you revise this chapter, read this chapter again, and revise it because it is very, very important for you to pass the exam. Chapter 1 to chapter 3, I think this is just a theory, and after that we will do some calculations. But please make sure after every lecture you revise that and so that you can prepare well for the exam. Alright, now apart from these lectures, you should also buy the BPP exam kit, I would recommend, or you can buy any other exam kit or Kaplan or any other, but please make sure you buy one of the exam kits from approved learning providers, so that after doing this chapter, reading the chapter notes, then watching me lecture, and then after that you can do the practice from exam kit. Now you have read the notes, you have watched me lecture, you have revised the notes, go back and then do the chapter 1 questions from the BPP exam kit or Kaplan or whichever. Alright, we do not provide the free exam kits. You have to buy from the market, unfortunately, or you can buy from online stores. Right then, I'm feeling dry. I will have to grab a glass of water, and I'll see you in the next video in a couple of minutes time. Thank you very much and goodbye.